Yo, what's going on, traders? This is a recap for Wednesday, August 27th, 2025, and I'm going to show you how I made $8,000 trading the NASDAQ. So before we even hop into it, here are some of the accounts I executed this trade on, the trade that we're going to be discussing. I made over $500 on 5 my funded futures funded accounts. I made around $600 on 5 funded Tradeify accounts. And then if we get this out of the way, I also took this on my Lucid funded account, so I'll bring this over. So here we are, 5 accounts, made $500 on all of them. So that's another, I don't know, 2.5K, something like that. So overall, really good day. And if you want to get funded with any of these firms, make sure to use code LOOP at checkout for the best available discount. And with that out of the way, let's get into the recap. Here we are on the 4-hour chart for the NASDAQ. We swept some sell side. We have a reaction up. This is to rebalance some of the down move that occurred last week. We're delivering fair value, rebalancing some of the imbalances and inefficiencies. So let's zoom in a little bit. Heading into today's 9:30 and 10 a.m. open. The first thing I'm always doing is identifying the higher time frame liquidity and higher time frame key levels. So heading into today's AM session, I had identified that we had some equal highs up here, smooth edges here, smooth edges. And we did have some sell side down at 370. And then we can also see we were trading within some higher time frame premium discount arrays. We got this 4-hour SIBI, and then we got this 4-hour BISI. So we were trading back and forth between these higher time frame imbalances. So let's drop down to the hourly chart. Here on the hourly, those equal highs become very clear and obvious. We have a pool of engineered buy side liquidity, a ton of equal highs. Look at all of it. We can mark out all these dots here, all these equal highs. This engineered a pool of buy side liquidity. For our sell side, we do have these swing lows here, but these are all internal lows on the lower time frame. There's really no higher time frame sell side besides this external range liquidity right here down at 370. So if we were going to deliver lower, I would anticipate us to see 370. So let's drop down to the 15-minute time frame. Again, we see all those equal highs, very clear and obvious. This pool of buy side here, a ton of buy side liquidity. We can also see on the 5-minute time frame that same pool of liquidity, and we do have some more internal lows here. So we had some sell side at 535. And we had some sell side at 480. One thing I need to mention is if we go to the 4-hour chart, prices started to trade down and deliver into this down close candle. Now, why is this significant? We had these 2 down close candles. Price then expanded away from them. And now prices are tracing. This could act and serve as a higher time frame discount array as a bullish order block. And you guys also know I'm always marking out my ranges. So if we were to mark out this 4-hour price swing down from the swing low up to the swing high, this is one impulse swing on the higher time frame on the 4-hour, we can get our higher time frame equilibrium. This is our 4-hour equilibrium. So let's drop back down to the lower time frame. Here we are on the 1-minute chart, and let's see how price ended up delivering heading into 9:30 open. Right at 9:30, we can see price ended up delivering lower. We engaged with some of the internal lows, some of this internal sell side. So I said, okay, let's see if price reacts up from here, or if we seek that higher time frame equilibrium and that higher time frame down close candle. So we'll fast forward a little bit more here. We got a little reaction up, but at this current point in time, look at how prices are trading back and forth, back and forth, back and forth. We engineered some lower time frame equal highs, and then we're starting to build up some lower time frame sell side. So I allowed for more price to form heading into the macro and heading into 10 a.m. So let's zoom in a little bit here. This is heading into the 950 macro. We can see that we cleared out some lower time frame sell side. We traded down into equilibrium. This line here, that's that equilibrium from the 4-hour. And the blue box represents that down close candle from the higher time frame, our bullish order block. So I was looking to see if price could react up from those higher time frame key levels, and then to be able to target 50% of this range that we formed from the swing high down to the swing low, and potentially even the buy side. Remember, we had a bunch of liquidity that was engineered. We can see here, bunch of equal highs. So if we can get some displacement, I'd look at potentially entering into a long position. We can also see here on the lower time frame that we formed this imbalance, this lower time frame SIBI. So I wanted to see if price can trade up through it and then use it as an IVG. We had one candle closure above the imbalance, but for me to consider the imbalance violated, I want to see the first candle's high that forms the SIBI. I want to see that get ran through. So we can see that price failed to run out that high, to run out the first candle's high. So I said, all right, this SIBI has technically not been violated. We got a candle closure above it. We got real close to trading through it, trading through that first candle's high, but we failed to. We traded right back down. It's important for me to see the first candle's high violated that formed that SIBI, because if we fail to, we could potentially deliver lower and seek some more sell side because the premium array will have been respected. So I waited for more price to form. We can see we ended up rating some of these lower time frame stops. And if we fast forward a little bit more here, we can see that price ended up running out that first candle's high, which gave me confirmation. It's been confirmed. It's been violated. The first candle's high, it's been ran through. So now I can use this as an inversion fair value gap. I can use it as an IVG. And we can also see within this displacement, we ended up forming a lower time frame BISI. So we had an IVG. We formed a BISI within the displacement. The BISI and IVG overlap. So SIBI, BISI overlap. That means we have a balanced price range. We have a BPR. And then we have a bullish change in the state of delivery that was formed right here, which means that we also have a bullish order block. This right here formed my long setup. We swept some liquidity. We traded into the higher time frame equilibrium, higher time frame key level, higher time frame order block. We then got some displacement higher, which created and formed a bullish shift in structure, a bullish change in the state of delivery. We also got an IVG, an order block, a BISI, a BPR. So we have a bunch of confluence here, a bunch of discount arrays, which told me, okay, if we can see a retracement into them, I'll look to enter to a buy position and I'll be targeting the opposing liquidity. We got some lower time frame buy side. And then if we zoom out, we have all those equal highs here that were engineered overnight. As soon as price retraced into the discount arrays, I entered into a long position. My stop loss was at the swing low. It's at the low of the order block. It's below the IVG, BPR, BISI. If we're going to push up, we really shouldn't see any of these discount arrays violated. So I was risking 30 points in order to try to make over 100, targeting the opposing liquidity, targeting all those equal highs. So let's see how price delivered. As soon as price traded through some of these lower time frame equal highs, I locked in and secured some partials for over 40 points. We can also mark out this impulse swing from the swing high down to the swing low. This is one price swing on the higher time frame. So if we get our fib and we mark out this range here, we can see that those highs were resting just above equilibrium. I'm always looking to take something off at 50%. And then if we take a look at the 5-minute, we can also take a look at the 15-minute too. This up move here, price traded up into some civvies. So we got some imbalances. Here on the 5-minute. We can also take a look at the 15-minute. And we can see the same exact thing. So we have some imbalances on the 5 and 15. So what this let me know is, just in case this is just a retracement for a continuation lower, I want to lock in some more profit. So dropping back down to the lower time frame, as soon as price traded up into those imbalances that we just went over on the 5 and 15-minute, I took off a majority of my position for 80 points profit. From here, I wanted to see if we could get continuation up to those equal highs, as well as we can mark out our standard deviation projections. We can mark out our manipulation from the swing low to the most recent swing high. This will give us our projections. We can see we have our -2 at 615. Then we have our -2.5 at 635, which aligns with that pool of buy side at 630. So I allowed for more price to form. We can see we got some back and forth movement. And this is heading into that macro here, the 1050 to 1110 macro. So during this time period, I wanted to see price push up. If we cannot get delivery during the macro, I was going to close out, because that means it could just drag on into the lunch hours and potentially even the PM session. So we'll fast forward a little bit more. And we can see that throughout the macro, prices are trading back and forth, back and forth, back and forth. So now we're trading outside of my time period. I only want to be trading during the New York AM session. So I closed out my runners for 80 points profit. And that was that. That was the trade. I really didn't need more than that. I wasn't willing to stay on the charts for longer. I could have maybe just set some orders, but I don't want to be managing any trade. I just wanted to call it a day. And that was it. But for shits and giggles, we can play this forward a little bit, because we do see that a little bit later on, if we just fast forward, price ended up delivering higher. We ended up engaging with some of that lower time frame sell side, engage with those lows. And we can see this took place basically heading into the 1150 macro. We got to push up to our projections, and we swept that liquidity at 630. And later on throughout the day, we can see that we did have a little reaction from that liquidity sweep from the standard deviation projections. We delivered a nice turtle soup short. But this is just a retracement into the higher time frame PD raise, the higher time frame discount raise. We then got to bounce back up, and we swept and engaged with all the buy side liquidity. So we cleared out all the higher time frame buy side, the buy side at 630, the buy side at 650. We engaged with that liquidity. So a quick little breakdown in summary. We engaged with some of the lower time frame sell side right here. So we swept some of the sell side. We traded down into the higher time frame equilibrium, which is 50% of the range. We also traded into this blue box, which is our 4-hour order block, our bullish order block. From there, I simply waited to see if we can get some displacement, if we can trade higher, and if so, I would look to enter into a buy position, which we got. We got some displacement. This formed a bullish change in the state of delivery, our IAVG, our BISI, our BPR, a bunch of discount rates. So I used that for my entry model. My stop was at the swing low, and I was targeting the opposing liquidity, and we can see it delivered. I would say this is perfect. This is like dang near perfect delivery right here. And I'd say the most important thing from this trade, the thing that you could take away, it's not the higher time frame, it's not the lower time frame. The most important thing, it is the narrative. It's why price should deliver buy side. And the answer to that is actually really simple. We can see here just before 9:30 open, we had one-way delivery. Price was only delivering sell side. We got no retracement. If I were to clear all this up real quick, and we just look at this specific price action right here, from about 8 a.m. down to just before the 9:50 macro, we only had sell side delivery. Price was only delivering lower. So what does this mean? We formed imbalances, the ones that we discussed on the 5 and 15 minute. We formed inefficiencies that needed to be rebalanced. Price is bound to deliver fair value. And how do we do that? By trading from a premium to a discount, from a discount to a premium. So I had anticipated price to at least deliver some buy side to retrace into 50% of this range. But not only that, we have all this buy side. We have all these equal highs, which is just stacked confluence. It's just more confluence telling me we're going to see some buy side delivered. Even if we don't seek the equal highs, we're going to see some buy side delivered, because with the unfilled imbalances on the 5-15 minute, with equilibrium of this price swing from the high to low, and with all the liquidity, with all the buy side, all those equal highs, that was a signal. That's what led me to build a narrative that we would see some buy side delivered. Even if we don't push up and clear out all the liquidity, we would at least see a move up into 50% of the range into the imbalances in order to deliver fair value. That's going to conclude the recap. Thank you so much for watching. If you enjoyed it, don't forget to like, subscribe, and share this with all your trading friends. And like always, if you want to get funded with any of these firms, make sure to use code LOOP for the best available discount. And until next time, good luck and good trading.